Hey, what's up, everybody? Christopher here. I am your head systems trader here at MacroOps. And every week, I do an internal video for the MacroOps team, just the team, like Alex and Brandon and the internal crew here, where I go through all my thoughts, I go through the markets, I go through my whole flow, but it's just for us. Um, and and then that kind of like each individual Brandon and Alex and everybody kind of like has their own thoughts on it. We all kind of share everything. But I was talking to them today after today's video, and they said, "Look, why don't you just do the video? Uh, because this is pretty, everybody should get this. In addition to doing the, that the setup email once a week, why don't you just do the video or just do it instead of the video or the email?" So that's what this is. So what we're going to be doing here is I'm going to go through my process as I blast through the markets, uh, and take a look at what I'm looking and how I'm trading. First thing I want to point out here is I'm not going to make predictions on the market. I'm going to basically go through and say where things are set up, what potentially could happen, and where we generally are. So I generally start with the equities, and let me just break it down. We've got the Russell, S&P, Dow, NASDAQ across the chart, top of the chart here. On the bottom, we have the 2-year, the 5-year, the 10-year, and the 30-year. I'll go through all the futures markets that I cover as we do that. The first thing I want to do as I start out each week is I want to take a look at the big picture going on in the S&P 500, because generally the S&P is where the biggest amount of money is moving, and a pretty good explanation of everything, risk on, risk off, everything is going on in the market. So what we're looking at here is a weekly S&P 500. Last week we closed right up at all-time highs. Today is Monday, and we had a 43 basis point down move, a little less than 0.5% down on the day, on the week too. This is the index. This is the cash. And on the bottom, what we have is the 10-week simple moving average of the New York Stock Exchange advancing issues. Okay. So it's all you're seeing is the moving average. You're not seeing the actual, this is what it looks like. So it's kind of crazy to read, but the simple moving average gives us a little bit better explanation where things are. And when it gets down into that gray area, at least it has been useful since the global financial crisis, that is typically either a major market crash is about to happen, or, and equally, is a bottom is in place. So where we currently are, mid-August, we got down to that very bottom level. It's rare that we get down there. We got down there during the tariff situation. Let's try to line this up a little more here. The tariff situation, you can see here, that's the tariffs. We got down below it there. We got down in summer of 2024, if you remember. That was dramatic, but at this point in time, it doesn't look that big a deal. Back in October 2023, the bottom of the 2022 bear market, the COVID bottom, which should not be named, 2018 bottom, the yuan refinancing, whatever, like all these areas that, though they look like crises at the time, they actually turn out being really good buying opportunities. And what's interesting about that is we got down there a week or two ago at all-time highs. That doesn't happen very often. So generally speaking, this is a bullish setup. We're still quite bullish. There's using that as a barometer just to guide the big picture. That's where we're at. We're mostly bullish in a bullish environment right here. And so let's start from there. So as we move into equities, kind of what I want to point out here is I use this thing called the SQN, System Quality Number. It's an oscillator that measures the percent change day to day, average over the last 100 days. And it gives me a reading of Are we bearish? Are we bullish? Are we neutral? Are we um, at an extreme in volatility? And what we can see here is we did go to an extreme in volatility on the S&P 500 and kind of peaked out. When that's useful because when that happens, typically when we hit a top in that, we get a local top. Doesn't always happen. Also, when we get these local tops, sometimes they last quite a long period of time. Let me see if I can pull some up here. You can see that we got one in early February of 2024. It didn't actually start really going down until April, so it was a couple of months. So we could still have a couple of months of decent travel here to the upside before this even considers any weakness. So right now, I'm cautiously optimistic on the upside. Seasonally, we are in the August September period, so some things are potentially hot that we pay attention to, but that's where we're at now. We are currently long S&P, Nasdaq, and we got long a curvy long on Russell. See if we can maximize that. Doesn't seem to want to be going. Is it moving? There we go. There we go. Okay. Sorry for the delay there. What was going on with my computer? Okay. We got long over here back in April. Let's call it. No, we didn't. This is Russell. We got long over here at about 2251 and currently ran up about 1 hour. We moved our stop to break even on this. This is the Russell. Okay. I don't want to see a huge, big, powerful move in the Russell. I would like to see a nice, calm move in the Russell. So we have multiple, that's 3.5, another 3% day, almost 3% day, multiple 3% days in a row. I don't want to see that. I want to see just kind of little drifting, little calmer moves on the Russell. So that would start to lead into potentially a little more toppiness. We are currently short the 10-year notes. We got short, curvy short. We are in a neutral market regime. You can see that the interest rates have for basically the last 2 years been in mostly a sideways range. And so we have a nice opportunity for a potential short setup down to the bottom, just looking for tradable activity. We're not looking for anything too exciting here. So we move into currencies. There's only one currency that really has been outshining this entire year, and that's the Mexican peso. Mexican peso, by far, has outshined all other assets, up about 15% on the year, and still holding. Euro during that same period of time. Let's see. Here we go. Let's see. Euro, which we caught a lot of the euro, currently at about 15%. We caught a lot of the euro. We caught the pound. We caught franc, and it's the only one that continues to hold its strength. So as you can see, euro has dropped. Let me just draw it here so you can see. Dropped, Swiss franc, dropped. See, when we pull up the peso, it is the only one that's either stayed or risen. And so honestly, that's the only currency that we're long at the moment. We were long euro, but we cut that. And I'm going to continue with the relative strength in the peso here, Mexican peso for now. though we have hit that bull volatile period, which would potentially expect a bit of a pullback. Otherwise, we have no trades in the currency markets worth looking at. Canadian dollar might be on the might be on. I'll have to take a look at that. Actually, yes, that is a long position. I'll be putting a long on the loonie, likely. Yeah, right about there. Yeah. So let me add my little squiggly line to tell me, let's go get along this thing. Nothing else. Kiwi is potential. I'll keep an eye on Kiwi as well. See, going through the process. I said this going into it that I didn't think anything was happening, and it just keeps developing in front of me. All right. In this one, in the left quadrant, we have gold, copper, silver, platinum. In the right quadrant, we got crude, we got West Texas, we got RBOB, we got Brent, and we got natty gas. We'll start with gold. And what I want to point out in gold is that it did hit its bull volatile high risk area, and it corrected. All we need is a 10% correction. We got 11%. That did it. And it's also corrected sideways. One thing that it hasn't done is gone down. We've got higher lows. We've got higher highs. Even we had that trend line, it broke out and came right back in. So a lot of people would be thinking to themselves, hey, this is a failed breakout, right? But nothing has changed. The change in character is still there. Higher highs, higher lows. It did what I liked. A lot of people get really worried about like reactions at key levels and failures. That didn't work. Reactions and failures at key levels. I do not. I want to see the reaction after those moves. So you can see it reacted. It blew, put up a new high, ripped, and then fell apart. But what did it do? It came back down to higher high support in the neutral market regime. So as everybody, all the momentum players are just winding out right now as this thing's coiling up. So we could get a new leg on the momentum side. It could continue to just base out sideways. But what is not apparent, what we're not seeing at the moment is we're not seeing this thing turn into a bearish setup as of yet. Okay. A lower low, a lower high, that might change my perspective on that. But at the moment, we keep holding. So gold, fairly bullish here. If you are long, see, there should be a long in this one. Not sure. Okay. Doesn't seem to want to show it. Where the entry was, we can definitely see where the trend system has got long. It got long again back at the 3,400 area. So we definitely have, we can take a look at we can take a look and see, take a look and see how, this is a pretty nice equity curve for that system. So about a 60% win rate on that. So being long in this general area is still something that we're doing and still something that we're interested in at MacroOps. Silver, on the other hand, silver is an industrial asset. It's not a central bank. It's not a buy and hold sort of asset. It actually, by design, gets hedged out by industry, right? Because the point of a lot of use of silver is industrial. And so in order to maintain your cost basis on things you produce, you want to keep the prices of your materials known, at least keep them from doing, going from 28 to 40 in, a couple of months. So there is another participant on the field with silver than there is with gold. Gold is not much of a industrial product. It's more of a store of value and speculation. There is some use for gold, of course, but it's not as much as silver. So silver is kind of trades different. A lot of people like to trade silver in the sense that, well, if gold does this, silver has to do it, follow along and whatever. Gold, it's different. It's just different type of asset class and has to be looked at a little bit differently. So we did get our bull volatile peak up here. We did get a lower high here, right? Lower high here, higher high, higher low. So that all still continues. So it's indecisive here. I'm not going to say this is bullish or bearish. I'm going to say that it ran up, put in higher highs, higher lows. That continues to hold. And this is a good example of like those key levels breaking and then reversing. So you can see we've had it all along the way, all sorts of key levels breaking and then an instant reversal. I believe that probably has something to do with the hedging of the asset that causes a lot of this reversal back into more of a mean. So I don't really have an opinion on silver, copper, nothing. Platinum, I have nothing. This is interesting because it went into bull volatile, flipped back to neutral, had a nice correction what do we get, a 16% correction here, which is what you should see, and then it should build a base and start going, except it's back into bull volatile right now. So this tends to lead me to believe that we're looking a little bit more no man's land. Crude did a nice reversal, mean reversion move. It wasn't completely set up for a trade for me, so I did not take this trade. I would want to see it get down to the lower channel here. But yeah, it's had a nice little up move and performing. So, we could see what happens. It has to look, we had you know, from the Israel 56 to 80 or so during the Israel-Iran war. It has to wear some of that volatility off. There's a bunch of contracts that were bought in all different locations, and now people are just going to kind of like wear it out, let that either do nothing and just expire worthlessly, or they'll just have to like cut positions. So I kind of see that happening along with RBOB. Similar, not much happening in RBOB here. We'd be looking to find a place to get short eventually. Brent, similar, a little less weak than that. And what's interesting here is this is let's do like a 1 month. This is the natural gas contract. It began in 1990, apparently. At least that's as far back data as I have. It appears to be at all-time lows. Appears to be bouncing off the all-time low area. I'm not interested in trading anything like that right now. So we'll just keep that out of the way. Corn has reversed after a nice long downtrend. Potential reversal here. This could be tradable. I'm not in it. I have a low expectancy on corn, so I don't trade it. Same with wheat. Soybean, on the other hand, I am looking for a short in the futures. Soybean oil, this was a missed opportunity on the long side. Cattle is something I don't trade. We'll get to crypto in a minute. Lumber has a reversal long. I don't trade lumber. Sugar doing nothing. Cocoa doing nothing. Coffee is doing something. And what I'm watching to see is this trend line breakout, pullback, and then a rip higher. We did get a spike today and a reversal. So I'm going to watch and see how this thing trades. But so far, that's lower highs. Until we can put in a higher high, things are going to be a little questionable. We could do it here. Boom, lower high, lower low. Start that leg over here. That's what I'm watching for coffee. Cotton, lumber has a mean reversion trade to the upside. We hit the bear volatile, which is the reversals area where you can expect a reversal, and we have kicked up and back down. The volume is not big enough for me to really trade this thing, so I won't be trading it. But if you are an individual trader and you want to get into this one, you'll be looking for a move up into the 673 area. And let me pull into the crypto market. Okay, first things first, our major bull market signal kicked off in October 2023. We are still in that. Nothing's changed. Bull market is still on crypto. Let's take a look at the shorter term 2-day, 3-day. Got out and got long again back in the April kerfuffle. Has been long since about 9,300. Still no sell signal here, despite the drama Um, so you can see we did have a break above new high, and now we got a new low. So we're watching more about this new low, how everything reacts here. No signal still. Um, and then what we want to take a look at here is see if we can how far we can go back. Quantum really had a big move, huh? Okay, so since the big dip happened, the recent big dip, let me pull up Ethereum actually. So Ethereum's been the big winner. It finally put in a new all-time high above 4,800. Uh, what's interesting to note is Bitcoin has been putting in all-time highs for basically the last year plus. Ethereum still just barely last week put in an all-time high back to the 2021 high. So Bitcoin has been the leader all the way through. Ethereum coming in within like I mean, geez, from April to today, that's 262% up move. But if we go from like let's do the breakout here to still 70% move, multiple 200-point move in 4 months, 1, 2, 3, 4 months, huge move. And the thing about Ethereum is it creates its own it has its own ecosystem, right? So it all the different things that trade along with it, like there's layer ones. Layer one is Ethereum. Layer two's ZK rollups. There's all sorts of different products that trade when Ethereum works. So in order to make Ethereum effective, because Ethereum's slow and expensive, being this big massive network, but it has all these other little side quests around it. And from a trading perspective, they're very useful because they move more than so if Ethereum's up 5%, you're probably going to get something like Arbitrum up 10%. They are leverage without being leverage. So you're owning Ethereum, but you're getting like a 2x leverage thing. So some things you want to do is go look at the ecosystems of the layer ones, right? So if you've got Solana, Ethereum, Chainlink, Cardano, Bitcoin, blah, blah, blah. Those are layer ones. Those are foundational blockchains. And then they have these secondary chains, which, so if you get a 5% move in one of the layer ones, you probably get like a 7 to 10% move in the layer twos and ZKs and all the different little spin-off technologies based on those ecosystems tend to move in similar fashion. So, for example, we could go take a look at Ethereum. Let me put up. So, okay, for this day, Ethereum put up 13%. Arbitrum put up 20%. Solana put up 10%. I would put like Bonk. I believe Bonk put up 13%. I love seeing the meme coins not performing, by the way. Okay, so ENA USD would be probably another one that we would see. So Ethereum is up 13% here. ENA is up 18% here. So you go find these ones where the big layer one's moving, and you can jump on board with some of these smaller ones that are built around that ecosystem. All that being said, right now, Bitcoin's still in charge. Ethereum really close to being, it's definitely being the most important thing. But it's, it's kind of having a bad day today, down 7%. Arbitrum's down 10%. So it's the, other side of that coin. Finally, we got long Apple and Tesla today. I didn't cover those, but got long Apple and Tesla. Look for a rotation of those. Okay, so that's what we got. If you got any questions, put them in the comments. Respond to this email if you're getting it from the mail list. If you're not signed up, you can sign up for our email list at macro-ops.com. It's free. You get all sorts of great commentary like this, multiple emails throughout the week. You can join our different groups. And, that's it. Have a wonderful trading week, everybody. Love you all. Bye.